Afternoon, everyone. So now today I am with you one case-based question that is related to the accountancy topic, that is a reconstitution of partnership, and then part is a retirement and death of a partner. So on screen you will see the question will be there. In question you see the three partners are already there. Their names are Ravina, Niti and Rajat, were partners in a firm and that prepares ice cream for various ice cream parlors in the city. Niti decided to retire from the firm as she was interested to join a restaurant business with her friend in Jaipur. At the time of retirement of Niti, the Workman compensation reserve, which you know that is a very important content, was shown at rupees 70,000 in the books of accounts. However, there was a claim of rupees 25,000 against it. After making adjustments for reserves and revaluation of assets and liabilities, the balance in Niti capital account was rupees 1,20,000. Ravina and Rajat paid rupees 1,80,000 in full settlement to Niti. There was an investment fluctuation reserve of rupees 15,000 at the time of retirement of Niti. When balance sheet shows investment, their market value is at 23,500 at rupees 20,000. Now see, the firm's balance sheet shows employees provident fund at rupees 12,000. The accountant of the firm is of the opinion to distribute the amount of employees provident fund to all the partners. Based on the above information, you are required to answer the following questions. Now the first question you will see is, the retirement of a partner means reconstitution of a firm? What you understand, retirement and reconstitution is the same? Yes. On the retirement of a partner, the old partnership comes to an end, but the firm continues and a new partnership comes into existence. So, a retirement means reconstitution of a firm only. That is your first question answer. Now, the second is, why does the firm revalue its assets and liabilities on retirement or death of a partner? So, on the retirement or death of a partner, the retiring partner or the representative of deceased partner must be given his share of profit oblique loss arising out of change due to the revaluation of assets and reassessment of liabilities. That is why assets and liabilities are revalued on retirement or death of a partner. Now see, the third most important part of this question is, which journal entry will be passed for the redistribution or the distribution of workmen compensation reserve at the time of retirement of Niti. You know very well, the workmen compensation reserve should be debit and then it will be credited with the help of the three partners capital which were old in the same ratio, that is the Ravina, Niti and Rajat, and that is the old partner capital ratio. You see very well, 70,000 is your compensation reserve and here it was given in the question the claim was 25,000 rupees. So the remaining 70,000 minus 25,000, you know very well, that is a 45,000, and 45,000 you should be divided equally, that is a 1 raised to 1 by 3 1 by 3 1 by 3, that is a 15,000. Now then after you have a next question that is related to the, identify the item for which Ravina and Rajat paid rupees 60,000 more to Niti. That is what? Why Ravina and Rajat paid 60,000 more to Niti? You have a need to identify the item. Then for that you have simply, the Niti was given her share of goodwill. What Niti will be give? Niti has given his share of goodwill only. Now the question number 5 is, that is, what will be the treatment of investment fluctuation reserve? Show by passing a journal entry. That is very simple. Even investment fluctuation reserve you have, and in a question it was given the amount is a 15,000, and you know very well the old capital ratio, that is a 1:1:1. Then it will be credited with to Ravina, to Rajat and to Niti's capital account, and then 15,000 multiplied with 1 by 3, then it will be 5,000, 5,000, 5,000. Now the last question, that is the accountant correct in his opinion regarding employees provident fund? So what you got it? Employees Provident Fund. For that, the accountant is correct in his opinion. So your answer should be no. The accountant is not correct in his approach, as Employees Provident Fund is a liability due to employees and not an accumulated profit. Hence, it should not have been distributed among the partners. It would be shown on the liabilities side of balance sheet of the reconstituted firm. So have a nice day. Do carefully this case study based question, that is good for your main exam.